Welcome to the Finance Talk. As you've seen in the thumbnail, we'll talk in detail about the Hindenburg Research and its effect on Adani stocks and the Indian economy. Bear with me because this video is going to be a little bit long because a lot of research has been put into it, and I'll try to keep it interesting. So let's get started. Hindenburg Research LLC is an investment research firm with a focus on activist short selling founded by Nathan Anderson in 2017 based in New York City. Hindenburg Research prepares its investigation report on a target company in 6 or more months by going through its public records and internal corporate documents as well as talking to its employees. The report is then circulated to Hindenburg's limited partners who together with Hindenburg take a short position in the target company. Short selling occurs when an investor borrows a share and sells it on the open market planning to buy it back later for less money. I will explain what short selling is at the end of the video. Hindenburg takes profit if the target company's share prices declines. Companies that have been the subjects of the reports include Nikola, Clover Health, Candy, Lordstown Motors, etc. Now we'll talk about the Adani Group. The group has 7 key publicly listed equities, 9 in total, with a collective market value of about INR 17.8 trillion. It also includes a maze of Adani private companies and family trusts. The conglomerate is involved in a wide array of businesses, largely focused on key infrastructure projects such as development of ports, airports, data centers, power generation and power transmission. The group's very top ranks and 8 of 22 key leaders are Adani family members, a dynamic that places control of the group's financials and key decisions in the hands of a few. According to Hindenburg Research, a former executive described the Adani Group as a family business. Gautam Adani's younger brother, Rajesh Adani, was accused by the Directorate of Revenue Intelligence of playing a central role in a diamond trading import-export scheme around 2004-2005. Rajesh was arrested at least twice over separate allegations of forgery and tax fraud. He was subsequently promoted to serve as Managing Director of Adani Group. Gautam Adani's brother-in-law, Samir Vora, was accused by the DRI of being a ringleader of the same diamond trading scam and repeatedly making false statements to regulators. He was subsequently promoted to Executive Director of the critical Adani Australia division. Gautam Adani's elder brother, Vinod Adani, has been described by media as an elusive figure. He has regularly been found at the center of the government's investigations into Adani's for his alleged role in managing a network of offshore entities used to facilitate fraud, according to research papers. Gautam Adani, founder and chairman of the Adani Group, has amassed a net worth of roughly $120 billion, adding over 100 billion in the past 3 years, largely through stock price appreciation in the group's 7 key listed companies, which have spiked an average of 819% in that period. Infrastructure firms are generally relatively sleepy, low growth, low multiple enterprises. Yet valuation metrics of Adani listed companies are comparable to the frothiest of high growth tech companies. 5 companies in the group, all but Adani Ports and Adani Wilmar, have current ratios below 1, suggesting a heightened short liquidity risk. The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year. These are usually defined as assets that are cash or will be turned into cash in a year or less, and liabilities that will be paid in a year or less. So lower the current ratio, more risk the company is in. In terms of unrestricted cash, Adani Port is the only listed entity with significant reserves at INR 86 billion. Multiple listed entities in the group are highly leveraged related to industry averages. 4 out of 7 of these entities have negative free cash flow, indicating the situation is worsening. There is so much debt the Adani Group has taken and no profits to show for. Beyond debt held by individual Adani entities, the company promoter group, that is the Adani insiders, have pledged portion of their equity as collateral for loans. Pledging of shares is one of the options that the promoters of companies use to secure loans to meet working capital requirements, personal needs and fund other ventures and acquisitions. Here you can see a chart where how much promoter shares are being pledged. A promoter shareholding in a company is used as collateral to avail a loan. The Adani Group has previously been the focus of 4 major government fraud investigations which have alleged money laundering, theft of taxpayer money and corruption, totaling an estimated US $17 billion. According to the research, Adani family members allegedly cooperated to create offshore shell entities in tax haven jurisdictions like Mauritius, the UAE, the Caribbean islands, generating forged import-export documentation in an apparent effort to generate fake and illegitimate turnover and to siphon money from the listed companies. They claim they have identified 38 Mauritius shell entities controlled by Vinod Adani or close associates. They have identified entities that are also single-handedly controlled by Vinod Adani in Cyprus, the UAE, Singapore and several Caribbean islands. Many of the Vinod Adani associated entities have no obvious signs of operation, including no reports, employees, no independent addresses or phone numbers, and no meaningful online presence. Despite this, they have collectively moved billions of dollars into Indian Adani publicly listed and private entities, often without required disclosure of the related party or nature of the deals. They have also uncovered rudimentary efforts seemingly designed to mask the nature of some of the shell entities. For example, 13 websites were created for Vinod Adani associated entities. Many were suspiciously formed on the same day, featuring only stock photos, naming no actual employees and listing the same set of nonsensical services. The Vinod Adani shells seem to serve several functions, including stock parking, stock manipulation and laundering, according to the Hindenburg Research. Money was being sent to Adani companies from Adani operated shell companies to manipulate the financials and show fake reports on auditing to keep up the mirage of good financial health of the company. They claim in one instance, a Vinod Adani controlled Mauritius entity with no signs of substantive operations lent INR 11.71 billion to a private Adani company which did not disclose it as being a loan. The private Adani firm subsequently lent this fund to a public listed Adani company. They also uncovered money laundering schemes where money was sent from India to shell companies as investments, which can be offset and not taxed. This money was then later bought back through the shells as investments in public listed companies, which are mainly Adani companies, but by washing the money and making it white. For example, they detail a series of transactions where assets were transferred from a subsidiary of listed Adani enterprise to a private Singaporean entity controlled by Vinod Adani without disclosure of the related party or nature of these deals. Once the funds were on the books of the private company in Singapore, the assets were almost immediately impaired, likely helping the public company in India avoid a material write-down and negative impact to net income to avoid tax. They say that many of the supposedly foreign funds exhibit flagrant irregularities such as shell companies in Mauritius and other countries with beneficial ownership concealed via nominee directors and with little to no diversification, holding portfolios almost exclusively consisting of shares in Adani listed companies, meaning these investment fund agencies hold no other shares other than Adani shares, which is unlikely for a fund house where they ideally diversify and hold a variety of stocks of different sectors. According to the research, a firm called Monte Rosa Investment Holdings controls 5 supposedly independent funds that collectively hold over INR 360 billion in shares of listed Adani companies, according to them. Another Cyprus-based entity called New Lina Investments until June-September 2021 owned over US $420 million in Adani Green Energy shares, comprising 95% of its portfolio. Evidence of stock manipulation in Adani listed companies shouldn't come as a surprise. SEBI has investigated and prosecuted more than 70 entities and individuals over the years, including Adani promoters for pumping Adani enterprise stocks. Another Vinod Adani controlled UAE entity called Emerging Market Investment lists no employees on LinkedIn, has no substantive online presence, has announced no clients or deals, and is based out of an apartment in Dubai. It lent US $1 billion to Adani Power subsidiary. Publicly listed companies in India are subjected to rules that require all promoter holdings, known as insider holdings, to be disclosed. Rules also require that listed companies have at least 25% of the shares be held by non-promoters or retail investors like us in order to avoid manipulation and insider trading. 4 of Adani's listed companies are on the brink of the delisting threshold due to high promoter ownership. Their research indicates that offshore shells and funds tied to the Adani Group own many of the largest non-promoter shares of Adani stock. So basically, Adani holds 75% shares on paper and the rest through shell companies. And the public is allocated 25% shares on paper, but in actuality, the percentage shares available to the public is very slim, making it easy for share manipulation, stock parking, pumping and dumping. According to the Hindenburg Research, the independent auditor for Adani Enterprise and Adani Total Gas is a tiny firm called Shah Dhandaria. Shah Dhandaria seems to have no current website. Historical archives of its website show that it had only 4 partners and 11 employees. Records show it pays INR 32,000 in monthly office rent. It is responsible for the audits of a company that has a market capitalization of about INR 640 million. According to them, Shah Dhandaria hardly seems capable of complex audit work. Adani Enterprises alone has 156 subsidiaries and many more joint ventures and affiliates. Further, Adani's 7 key listed entities collectively have 578 subsidiaries and have engaged in a total of 625 separate related party transactions in fiscal year 2022 alone. They also claim the audit partners of Shah Dhandaria, who respectively signed off on Adani Enterprise and Adani Total Gas annual audits, were as young as 24-23 years old. They were essentially fresh out of school, hardly in a position to scrutinize and hold to account the financials of some of the largest companies in the country, run by one of the most powerful individuals. They claim that Adani Group has been able to operate a large flagrant fraud in broad daylight in large parts because investors, journalists, citizens and even politicians have been afraid to speak out for the fear of reprisal. Now, how does Hindenburg profit from this equation? Hindenburg are short sellers. They borrow and not buy shares for a limited time and sell these borrowed shares in the open market. Say they borrow Adani shares when it was 4,000 per share. Now when the shares have crashed almost 50% and one share value is around 1,500 rupees and they only have to return that much, thereby making a profit. Keeping in mind this is for one share of Adani. Imagine multiple shares, they make millions out of this. This is an age-old way of investing and nothing new, which they have already mentioned in the report. So whatever research the Hindenburg has given, we should take it with a pinch of salt because Hindenburg also stand to profit from this equation. How will all this affect the Indian stock market and the Indian economy? The Adani Group controls 6 airports, 13 ports, multiple railway and roads, renewable energy sector, solar power panel manufacturing, agriculture sector, food manufacturing sector, logistics. So fall of Adani will definitely take a hit on the Indian economy. Also, many public sector banks have lent millions to Adani, which if defaulted on these loans can cause a huge burden over the banking sector. In short, when a monopoly like Adani goes down, the country is bound to take a hit. It is exactly how the company has responded to the allegations. The Adani has said that it is a direct attack on the country's economy, which in my opinion is a very weak argument. And even though all the allegations cannot be taken at face value without being proven guilty, the Adanis have not given any explanation to the 88 open letter question asked by the Hindenburg Research team. Instead, they are trying to hide behind the fake nationalism narrative. I hope you liked the video and my research today. If you want to see more videos like this, please do subscribe and hit the like button, and I'll see you in the next one.